Hello and welcome. Today we are diving into a topic that's set to completely change how credit unions think about their treasury operations, stablecoins. Let's get right into what this really means for you and why it's something you need to be thinking about right now.
So let's just start with this one question. What if the money you manage just never stopped moving? I'm not talking about just during banking hours. I mean all day, every day, weekends, holidays, you name it. This isn't some far-off idea. It's the new reality that digital currencies are building as we speak.
To really get a handle on this, we've got to zoom out and look at the bigger picture. We are right in the middle of this huge global shift to new kinds of digital money. You've heard of Bitcoin, of course, but now even governments are looking into creating their own digital currencies. A whole new financial world is taking shape right in front of us.
But, out of all these new digital assets, there's one specific type that really needs our attention today. It's called a stablecoin. And yeah, its name pretty much gives away its most important feature. It is designed to be stable, to hold its value. So how in the world do they do that? How do they actually achieve that stability? Let's break it down and get into the mechanics of how these digital dollars really work. Because understanding this part is absolutely key to seeing how they could impact your credit union. Okay, so at its core, a stablecoin is just a digital token that lives on a blockchain. Its entire job, its whole reason for existing, is to keep a fixed value. Usually that means it's pegged one-to-one with a currency like the US dollar. Just think of it as a digital twin of a dollar that you can zip around over the internet. And this is exactly how that peg works. It's pretty clever. For every single stablecoin that gets created, a real-world dollar, or something just as good, like a government bond, gets put into a reserve. It's this one-to-one backing that gives the whole thing its stability and makes people trust it. So what's the big result of all this? Well, because these things live on a blockchain, they can be sent anywhere in the world, anytime, in just seconds. This creates a payment system that's always on, 24/7. And, here's the kicker, it often skips the traditional banks entirely. All right, so we've covered the what. We get what stablecoins are. Now for the really important part, the so what. How does this technology directly hit the lifeblood of every single credit union, its member deposits? Forever, your Treasury and asset liability teams have counted on deposits being a pretty stable, predictable source of funds. You know the rhythms, the daily and weekly patterns of how money moves in and out. It's predictable. But stablecoins could totally change that whole equation. What happens when your members, both people and businesses, start using stablecoins for stuff like instant payments or even payroll? Suddenly, those deposits you could always count on could become way more mobile and a whole lot less predictable. And this slide right here really lays it all out. On the left, you've got the old world. Money moves from 9 to 5. The flows are predictable. On the right, you've got the new reality. Money moving 24/7, 365. That means your treasury teams can't just plan for what happens at the end of the day anymore. You have to be ready for big outflows at literally any moment. Okay, so this brings us to the most practical part of this whole conversation. How do we go from just being aware of this to actually taking action? What can you do to get your treasury team ready for this new world? There are 5 key areas your team needs to zero in on. First, you have to monitor deposit behavior like a hawk for any new patterns. Are funds suddenly leaving at 2 in the morning on a Sunday? Second, you're going to need real-time cash management tools. End-of-day reports are basically obsolete in a world that has no end of day. Third, you absolutely have to understand the specific settlement risks here. Settling on a blockchain is not the same as Fedwire. The rules are different. Fourth, you need to take a hard look at your intraday liquidity. That's the cash you need on hand during the day, for a world that never closes. And finally, you've got to start planning for the right mix of regular cash and digital reserves. Each one of these is a critical conversation you should be having right now. Look, this isn't just about managing some new product. It's about strategically getting ready for a massive shift in the entire liquidity landscape. And staying ahead of this kind of change, well, it's absolutely essential if you want to stay stable and resilient. Navigating all this is, let's be honest, pretty complex. It often takes some specialized expertise. And that's exactly why organizations like Treasury Well exist. They focus on helping credit unions prepare for these exact kinds of shifts, guiding them through everything from interest rate risk to digital assets so they can move forward safely. So I'll just leave you with this one final thought. We've seen what stablecoins are, and we've seen the incredible impact they could have on how you manage liquidity. So the only question that's really left is, are you ready? Is your treasury team truly prepared for a world where the money never, ever sleeps?